Good morning, everybody. Welcome to JoshuaGaming.com. I am Joshua Gaiman. Today is Friday, October 7th, 2011. I wanted to give you a quick market report and investing report. Real quick side note, today's my dog's 4th birthday. Dime, laying around here somewhere behind me. Dime, I don't know if you can see her. No, you can't see her. Oh, she's gonna come up. Come here. Here, come up. Come up. Say hi to everybody, Dime. Say hi to everybody. Everybody see Dime? Okay. Dime's 4th birthday today. Get back into the markets. The Dow is at 11,100 points roughly this morning. So we're up roughly 300 points on the week, but we're still down roughly 200 points in the last 30 days. And I was going back a little bit this morning, and going back to before the crisis of 2008, stock market was over 14,000 points. Crisis of 08 dropped it when we were at 6,600 points in March of 09 before we entered our last bull market. And the stocks, from March of 09 to July of this year, 2011, so a little less than 2.5 years, we went from 6,600 points to 12,800 points. There was a big run up for the stock market. Of course, a lot of money printing was going on during that time. But real important to notice, over the last 90 days, we've dropped from 12,800 points to right now we're at around 11,100. So we're down, 1,700 points in the last 90 days or so. Is this an indication of what's to come? I think it is. I think we're going to see that Dow Jones fall until we reach quantitative easing 3. I think quantitative easing 3 or QE3 is going to be really big. The Fed, I think, is $600 billion in November of 2010 when they did QE2. I think the next one's going to be really big in the trillions, at least over 1 trillion. That's my prediction. I think that'll shoot the Dow Jones up, but it's going to be inflation. So, I'm very bearish on the stock market at the moment. Gold, right now we're at about $16.35 an ounce. We're pretty flat over the last 7 days. Down $150 in the last 30 days, and up $300 in the last year. Since March of 09, when that Dow Jones started going up, we're up $725 in gold. But here's the thing, if you go back to back before the crisis, when the Dow Jones was up at 14,000, we're still down 3,500 points in the Dow Jones from before the crisis, whereas gold is up 500%. So from we were roughly I don't remember what we were at exactly right before the crisis, but we were at $300-400, and now we're at over $1,600 an ounce. That's pretty crazy. Silver, right now we're at $32 an ounce. We're up almost $2 in the last 7 days, so that's really good for silver. Depending on what your position is, we're down $9 in the last 30 days. Of course, that was because we saw the margin requirements earlier this month, and which just crashed the price of silver, especially paper silver. Physical silver, we're just seeing the premium rise to kind of combat what's going on, the manipulation of the paper market. So if you're not sure exactly what I'm talking about, you can go back a couple of videos, and I talked about manipulation in the markets. So anyways, we're up $19 since March of 09 in silver, which is just unbelievable. And we're just going to keep seeing these trends with gold and silver go up. So as I'm a little bit bearish right now on the Dow, I'm bullish on gold and silver. The thing is, QE, like I said, it'd probably up the stock market. It'll up gold and silver as well, because it's putting more money into the system. So the other reason I'm real bullish right now on gold and silver is because everything that's going on in Europe right now with the debt crisis over there. They have basically the same problem as we have. Too much debt, they can't pay it back without central banks, wiping out some of the debt or buying the bonds themselves. So pretty crazy stuff going on in the markets, of course, which is almost, like I said before, the new norm. Real estate, it continues to be a buffet for investors. We're seeing a lot of cash and hard money. Cheap properties are going. Robert Kiyosaki said the best niche right now for real estate is 300 to 800 unit apartment complexes. Not sure if you're in a position to invest like that, but you can buy $50,000 houses that cash flow right now too. So I like real estate. I like precious metals because these things are real. like I said, a lot of cash and hard money buying right now. Operation Twist isn't really going to do anything to improve home prices, in my opinion. What they're doing is the Federal Reserve's buying long-term debt and selling off short-term debt in an effort to push down long-term interest rates. Well, the reality of it is, I mean, that might help a couple people refinance their house and save $100 a month, but it's not going to do anything to stimulate the economy. You know, people that want to buy houses right now, they're not able to. We got tarnished credit. We don't have the money to put down. They want a urine sample, a stool sample, the birth rights to our firstborn, bank statements for the last 15 years. The reality of it is, on new loans, most people just can't qualify right now. The banks aren't lending it out. So until we see that happening, I don't think we're really going to see the prices rise, other than inflation. So pretty crazy. Down here in Phoenix, there's a lot of buyers. I mean, I got 15 properties right now on the market. All of them are under contract. One of them, the one that was not under contract, got an offer last night and another offer this morning. And I just had a third person call me, and I said, we got two offers in the last 24 hours, but we're not going to accept anything until Monday. So go ahead. We'll probably have 3 or 4 offers by the time we reach Monday. All that to say, 15 properties on the market. They're all under contract. Obviously, getting an offer right now is not a problem. But like I said, it's mostly cash and hard money, so we're not really seeing prices move a whole lot. We're just seeing the inventory down and the time on the market lower. So anyways, all that to say, it's a perfect storm for real estate investing and buying cash flow properties, but we're not going to see values really go sky back up until people can buy again, which I don't know when that's going to happen. I mean, it could be decades. It's tough right now for the flippers, with the exception of we are wholesaling some properties right now, but we're not really trying to. I mean, we acquire a property, we start fixing it up, we get it filled up with the tenant. We're always looking to flip it. I mean, we always throw it on the market, and we're always looking for a buyer. But that's just icing on the cake if that can happen, if we can turn one real quick. And we turned one last month. We got it at 35, flipped it at 42 in a week. But it was on accident. I mean, we weren't really trying to do that. We bought the property knowing it was going to cash flow great. In reality, we would have made a lot more than $7,000 had we held it long term. But we got our $7,000 really quick, and now we can go out and find another one. So, anyways, my own point being, there's always going to be professionals that are in the market daily that can make money wholesaling or flipping. But it's icing on the cake. Those professionals right now know that they're investing for cash flow, and if they come across one that they happen to flip or they're able to flip, maybe they do that, but that's really not the name of the game at this point. So that's your market update. We'll talk to you soon. Have a great weekend. Not exactly sure what's on the agenda for next week. We'll be taking a look at that. I think the Federal Reserve right now is letting everything, bringing everybody to their knees a little bit. They're not really saying they're going to step up. I mean, they've said with Europe that they'll provide whatever liquidity the markets need in Europe, which means more of the same monetary policy of buying back debt and throwing money into the system, devaluing the dollar. But realistically, quantitative easing's kind of got a bad name to it, I think, right now. So I think the Federal Reserve's going to let everybody kind of fall to their knees a little bit and to where we'll go back to them for handouts, and then they'll unleash quantitative easing. So we'll talk to you soon. I hope you learned something, and share your comments below if you like what you saw. Subscribe, and we'll talk to you soon.